everybody, and welcome into Commodity Culture, where we break down commodities, markets, sound money principles, and geopolitics, all with the goal of making you a better investor in the commodities sector. My name is Jesse Day. Today is February 27th, 2026. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the president and CEO of Noble Plains Uranium, a U.S.-focused uranium exploration and development company advancing a portfolio of high potential projects amenable to in situ recovery mining. It's Drew Zimmerman. Great to have you back on the show.
Jesse, it's great to be back on. And let me just grab a sip of coffee here. As promised, I had to get the new favorite mug ready for the show.
That is awesome. I'm not going to plug the mug. This is about Noble Plains, so we're not going to do that today. But I really do appreciate that. Now, I want to dive into your current overview of the uranium sector, because last time I had you on the show was the end of June. Last year, we've seen a lot transpire when it comes to both uranium and nuclear. What are you watching most right now in the sector that you think more investors should be focused on?
Yeah, that's not an easy question. There's been so much going on in the uranium space, but I think when it comes to any commodity, you really need to look at the supply side of the equation, the demand side, and then the equilibrium is where price is. So when we're looking at the demand side of this equation, it just continues to build and build and build. And I think the important thing to recognize in uranium, this is inelastic demand. Price can continue to go up. And when you're building, multi-billion-dollar nuclear reactors, you're not about to, crimp your demand just because, prices have gone up a little bit. And again, with some of the issues that we're having in the nuclear fuel supply chain, you're seeing actually, the conversion and enrichment need more because of the way that they're processing that uranium. So they're needing more input on the front end. So when you've got a market that is seeing, global reactor restarts, global reactor construction, again, we've got 79 reactors under construction right now, 39 of those in China. I mean, when those reactors, those that are already under construction are done, China will become a larger nuclear power or larger reactor fleet than the United States for the first time ever, which is a huge milestone. Obviously, they're moving that direction very, very quickly. And we're seeing in the U.S., we're seeing a lot of bipartisan support. You really have Trump leaning into nuclear. When he flew over to Davos, he talked about the U.S. going heavy into nuclear. You had a State of the Union. They were really leaning into energy and how the U.S. was going to be an energy superpower. So there's a lot leaning into the the demand side of nuclear, the supply side of electricity that's needed. And again, the other demand piece is tech. We were moving towards this with the electrification of the economy, but the data centers that tech needs, the data centers that AI needs, and the fact that this really is an AI race at the national level, I think is what's really driving the urgency on the demand side. So again, that's a demand side that is, growing rapidly. It's got a lot of different drivers behind it, which is always good for a market demand. And then you've got a supply side that hasn't been able to keep up. We've been living on secondary supply for decades, and the mine supply hasn't been able to meet the current demand, won't be able to meet the current demand. It doesn't really have any sort of lever to lean on to immediately push supply higher. So I think that's why we're continuing to see uranium prices start to move higher. Originally, beginning in 24, over $100, pulled back to 65 just recently at $100 again. We've pulled back to about high 80s, $90 now. But that is a good price action that you want to see in a commodity. So I think the supply demand equation is showing us that the equilibrium is steadily higher prices.
I want to home in on the supply side for a moment and specifically talk about Kazatomprom and their deal with India, because they announced a massive long-term uranium supply agreement with India's Department of Atomic Energy in a transaction that represents more than 50% of Kazatomprom's book value. Now, it's still pending shareholder approval, which is set to take place in early April. Assuming it does go through, how do you think this will impact uranium supply, considering that Kazakhstan has traditionally provided about a third of the world's uranium on an annual basis, and your overall thoughts on this agreement?
Yeah, I think there's a lot of different ways to look at the agreement. One is just, the simple math of pounds available and pounds that are getting tied up. But more importantly than that, I think what we're also seeing is the signal that a state-run firm out of India is willing to go to another state-run firm, Kazatomprom, and say, we want to secure supply. India's got 24 reactors. They're building, I think, another 16 right now under construction, or 6 under construction, another 16 planned. So they're going to be doubling their reactor capacity, again, coming to the supply side. And they're seeing what's happening in the uranium space right now, in the critical mineral space, and saying, we want to secure supply. Price is something that we can live with right now, but we want to make sure that we have that uranium coming. So again, I think an even more powerful piece is, yes, they're going to Kazakhstan and Kazatomprom, but they've also come to Canada. Canada and Mark Carney are about to ink a $2.5 to $3 billion deal with India as well. So when you're looking at the supply of uranium, yes, you've got Canada, the second largest producer, but Kazakhstan, the highest. We've been seeing this bifurcation where, the BRIC nations were getting, the uranium in the East was going to stay in the East, uranium in the West was in short supply, and we need more of it. And now you've got, a BRIC country not only securing what's coming out of Kazakhstan, but then coming to Canada and saying, we need some of that as well. So I think, again, it's just this bifurcated market that is getting more bifurcated, and these state-run enterprises that have the foresight to be looking 5-10 years ahead. And again, because of the deal that they're looking at with Kazatomprom, that is a combined contract value, which tells us it's going to likely be a very long-term contract in order to be that size that Kazatomprom needs to have approval for. And again, everybody's looking at that and saying, oh, it needs approval. Well, Kazatomprom is owned 63 or 62% by the Sovereign Wealth Fund. So if Kazakhstan wants it to go ahead, it will go ahead. There's no debating that sort of thing. So again, I think the biggest thing to take away from it is the signal that big state-run firms are realizing they need to secure supply, and secure supply now for the considerable timeline into the future. And that, I think, is the big piece to take away is, again, it's nice to be able to get something at a good price, but when you just need it, it doesn't matter what price it's at. And that's what they're trying to make sure they have it when they need it.
And it's not only governments, of course, but big tech getting heavily involved in the sector. And Meta recently announced in January this year some major agreements with Vistra, TerraPower, and Oklo to power AI data centers. This includes a 20-year power purchase from Vistra, exclusively coming from nuclear energy, and the construction of a 1.2 gigawatt SMR in Ohio. We keep seeing tech titans lean into nuclear as a means to power data centers. How important are these deals, and do you expect more of this moving forward?
Yeah, when it comes to uranium, it's just been, again, headline after headline, week after week of how are we going to generate enough electricity? And, nuclear is the obvious choice. The capacity factor is there. So if you're going to build out, a huge amount of infrastructure for it, it operates at 93 to 94% capacity factor, which is what you need. It's that base load power. It's clean. So it's the natural choice. I think that's why you see big tech really leaning into it. And I think that's going to continue. We're seeing the urgency, I think, come from, the marginal consumer of power, which has been these AI data centers that have really started to move prices. The average electricity price in the United States is up over 40% in the last 4 years. We have an administration in power right now in Trump that's really trying to focus on affordability for his citizens. So you're seeing Teck now look at this and say, okay, if we can't just take power out of the grid because that's driving prices higher, we need to come up with our own solutions. And if we're going to stay ahead in this AI tech race, the bottleneck for us is power. How do we overcome that? How do we move fast? They've got the capital to be able to do it. They were doing it out of free cash flow. Now we're seeing them, sell hundreds of billions of dollars worth of bonds to finance this. So the money is there. It's in very big quantities. But I think the urgency is in how do they do it on their own. And I think, next week there's going to be the big tech players go to the White House, where they're expected to sort of sign a pledge to say, we're going to bring our own power to the United States. We're going to finance the building of it because we don't want power prices for the normal citizens to be going higher. You're seeing, in some states, there's a lot of pushback against new data centers, even though it, provides growth to the economy, provides jobs. It's also driving up power prices. It's taking water. It's doing all those sort of things. So I think we're seeing here is tech realizing this and realizing that because they need to move quick, but because they want to be able to get it done, they're going to have to bring it themselves. So, that was a long answer to say, yes, I think we're going to see a lot more from tech in the power generation side of things. Obviously, these agreements showing they're already willing to move in that direction. And I think we're going to see more of that to come.
You mentioned earlier the uranium spot price spiking to around $100 in late January, correcting to where we are today in the high 80s, close to $90, with term prices being around the same level. What do you make of this recent price action in uranium, and what is it telling us about the supply-demand dynamics of the market right now?
Yeah, I mean, one, when you see prices going up, as I said at the beginning, it's the equilibrium function in a supply-demand equation. The nuclear fuel supply, the uranium market is a small, opaque market, so there's a lot of different nuance to it. But one of the things I like to do is use the analogy of oil and gas. So when gasoline demand goes up, everybody sees the price at the pump go up. And what happens is refining margins go up because demand for gasoline goes up. They have more margin to produce more gasoline. And then margin prices, as those go up at the refiners, as they build out more capacity or take in more oil prices then start to go up. So if we take that analogy and bring it to the uranium sector, we're seeing nuclear fuel prices go up for fueling the reactors. Again, this is done internally with the utilities, but where we see it is the refining margins. The refining margins in nuclear are SWU, separative work units. So that's the ability to enrich uranium into the usable nuclear fuel from uranium. So we've had SWU go from roughly $50 to over $175. So when you've got these great big margins at the refiners and they're staying high and growing higher, that tells you that there will be more demand coming to uranium as well, and that will help drive uranium prices. Not only that, you've had the government in the United States now backstop saying we need more conversion and enrichment because, again, a lot of that was done in Russia. They recently gave $2.7 billion to three different companies, $900 million each, to help build out a more robust domestic conversion and enrichment pipeline. So again, you're seeing these refining margins, so to speak, in uranium grow, and you're seeing them be supported by the government, and that will just create more demand, the ability to take in more uranium, and again, increase the demand on the natural uranium on the front side that again will drive prices. So there's always sort of a stepped program in this process. And again, leaning into the oil and gas analogy sort of allows you to see how that process would come back to the uranium spot price. So I think with uranium, at $90 now, we still have a lot more room to move to the upside. The other side I will say is, the incentive price is important, and you can always try and determine what that is. But one of the projects that is right next to us, Cameco's Smith Islands. This is the world's second largest uranium producer. It's their largest U.S. asset. They're paying, as of last year, $15 million a year in care and maintenance to leave those pounds in the ground. They're saying, $85, $90 per pound is not enough for us to pull those out. We think uranium prices are going higher. And when you have the second largest producer in the world saying that, I would want to believe them.
Yeah, great analysis. Now, it's been exciting times for Noble Plains Uranium. You've got some news coming out about recent drill results. We're going to dive into that in just a moment. But before we do, for those tuning in for the first time on the Noble Plains story, could you give us an overview of the company?
Yeah, I mean, it was built because of everything that we've just talked about, what we've been seeing in the U.S. domestic uranium story. We knew that, the world needs more uranium, but the U.S. really needs more domestic uranium. So Noble Plains is built to go after brownfield projects. So an exploration company trying to remove exploration risk. We know there's uranium there. Use modern, efficient, effective drilling to take what is exploration targets or historic pounds in the ground and convert those into compliant pounds that we know are there, are a base of value, and then be able to build up enough pounds, a portfolio of projects in the United States that we can move towards a production decision to be able to bring those pounds to the market. So if you're going to do that, you want to be doing that in a great state. That's why we're focused on Wyoming. It's produced over 250 million pounds of uranium in the past, but it's an agreement state with the NRC, so permitting is more streamlined. And it's a state where you can really get work done. And I think that's been shown with the progress that we've already made on our projects there. But that's the real strategy behind Noble, is to be able to say we've got a clear linear value creation path without a lot of the exploration risk, because again, we're going after projects where we know the uranium is there. We're just proving it out. And again, as we just talked about with all the demand coming in the uranium market, that is creating the urgency and the need for companies like us to be able to move faster, to be able to bring those pounds to the market. So that's what we're really focused on. And as we do that, each step, each catalyst will provide value for our shareholders. And again, with the backdrop of uranium that we're in right now, we think we're really in an asymmetric opportunity to provide a lot of value as we bring those pounds from historic or exploration into compliant pounds, and again, build that roster of portfolio projects.
Well, one of those projects is the Duck Creek project. You've completed a drill program there and are advancing towards first compliant resource. Maybe you start by taking a step back and describing the Duck Creek project and its importance for us, and then walk us through the details of those drill results and what the next steps are.
Yeah, the Duck Creek project is our flagship project. It's in the Powder River Basin in Wyoming. We are, adjacent to Cameco's Smith Highlands Ranch. That's the one I mentioned. They're largest in the U.S., just north, and we're sandwiched in between that project and UEC's Barge project to the north of us. But we acquired this project. It had a 3-mile trend of over 4,000 historic drill holes on it. So we had a 43-101 resource done, an exploration target done, of 5.4 million pounds of uranium when we acquired this project. So again, knowing that uranium was there. But in August, we closed that acquisition. We then permitted it, and then we drilled it starting at the end of November and finished just at the beginning of this month. And what that drilling did was be able to take that, historic drill logs and bring it into a more compliant state. We know that uranium is there now. And, the success of this drill program has just far exceeded what we thought we would see for the initial drill program on this project. And just to tell you how strong these results were, I did a search for, in the last 5 years, the 10 strongest or highest grade drill results. These are roll front uranium projects in Wyoming. We had the top 5 of the top 10 over the last 10 years in Wyoming. So again, incredibly strong results, up to 1.5% or 1.49%, which for roll front uranium is incredibly high, but also importantly, strong continuity throughout. So again, everything that you're wanting to see for an ISR project. And again, for us being able to see such strong results, we were able to go out and stake. So again, build out this project size, but we were able to add another 2.25 miles to our 3-mile trend. So a 75% extension. We don't have the historical drilling on that extension, but we do know from some of the historical workings that we see, there was small little open pits that were mined there in the 70s and 80s. So again, strong confidence, given that a lot of our mineralization was actually getting stronger to the north end, and we staked the additional ground on the north end. So again, organically grow the pounds in the ground that we have at Duck Creek and really make it, the scale of a project that is one of the strong projects in the state of Wyoming. So we're very happy to be working right now to move that project towards a compliant resource. We're looking to be able to publish that in May of this year. So again, our strategy of acquiring, permitting, and drilling very efficiently and effectively a project to be able to bring it to a compliant resource. And given the strength of the results that we have, we're looking to exceed what we had for an exploration target of 5.4 million pounds. So that's going to be a very key catalyst for the company. It's going to be our first firm base of value of compliant pounds. They're not, we think they're there. We hope they're there. These are modeled and are proven to be there in a 43-101 resource. So that's incredibly exciting. And then, as I said, we've got the organic expansion now that we'll look at with that new extension to the north on this project to grow those pounds even more.
You've also acquired historical drill data on over 1,200 drill holes on the Shirley Central project. So once again, maybe first take a step back, talk to us about how the Shirley Central project fits into your portfolio, and then describe how significant the data is and how you plan to leverage it to advance the project.
Yeah, the Shirley Basin is, again, another prolific basin in Wyoming. It's produced over 50 million pounds. For us, this project made a lot of sense because what was happening with the neighboring project, it's the Shirley Basin project being run by UR Energy. They're about to go into production on that project right now with a new ISR facility that's permitted for 1 million pounds a year. They've got 8.8 million pounds on that project. So when we were able to acquire it, it made sense. We knew there was historical workings on our project, and we knew it was right next door to this new infrastructure that was getting built out. So once we acquired it, we were able to start discussions with UR Energy. They had historical data that had covered their own project. So their own 8.8 million pound resource, they did 14 confirmation holes to turn that historical drilling into a compliant resource. So we were starting to talk to them, and they actually had the 1,211 holes that covered our project. So we were able to acquire that data. And again, it's been our track to try and move these all along as fast as you can. And this is, $6 million USD worth of drill data if we were going to go out and recreate that and now. So not only does it allow us to move along very quickly, but also very cost effectively. So we're in the process of digesting, interpreting, and modeling that data. And we've already permitted Shirley Central for a 22-hole confirmation drill program. So once we have that modeled, we'll be able to come to the market and say, here's what we're seeing in the historical data. We're about to go out and drill it and confirm it. And the other big important piece of this was, UR Energy didn't just say, here's our data. Thank you very much for buying that off of us. They said, we'll become a shareholder of Noble Plains. We like what we see at this project. So they now own 6.4% of Noble Plains. This is, the third largest uranium producer in the U.S., taking an interest in us and especially taking an interest in what we're doing in the Shirley Basin project right next to theirs. And again, right next to a project that is about to go into production for them. So it's incredibly exciting for us in the fact that, this is a project that, could be on the fast track towards being production ready. If we can get through this historical data, prove out what is there historically, again, and then the ability to sort of ride the coattails of the new infrastructure that's been built by now a partner of ours, UR Energy.
Yeah, some great synergies there with UR Energy. What are the upcoming news flow and catalysts that shareholders can most look forward to in 2026? You mentioned advancing Duck Creek to a compliant resource sometime around May. Maybe you could walk us through the timeline for getting there and just anything else that should be on people's radars when it comes to catalysts for the company.
Yeah, as you mentioned, Duck Creek, our flagship, that's going to be our first big, bedrock of value is how I describe it. So we are targeting May to be able to have that 43-101 completed and put out to the market. Again, we're looking to meet or exceed that 5.4 million pound number. And again, for a junior exploration company to have firm pounds in the ground, we're seeing our neighbors, UR and UEC, as producers trading at $35 to $40 per compliant pound in the ground. So for us to start to stack, multi-million pounds in the ground is very important. We'll also be looking to get out to Duck Creek again and start a drill program on the extension that we were able to stake this year. So again, being able to build out more district size and scale to that project, and again, work towards that UEC project to the north of us. So that will be another drill program we'll look to undertake. And then what we're doing with Shirley Central will probably be a near-term event for us as well. As I said, once we sort of fully model that historic data to be able to say, here's what we're seeing, here's our sort of internal guesstimate with the historical data. We're now going to go out and set up a small drill program to confirm that. And then just as Duck Creek is doing now, take that historical data and the new drilling and move it forward to a compliant resource with a 43101. So again, being able to have two projects moving that direction. And I think it's also important to look and say, as of our last meeting, I think we had just taken in the two projects. So, we're continuing to evaluate projects that, fit this strategy that we have. We think there's the ability to build out a portfolio of projects. And if you look at the producers in Wyoming, whether that's Cameco, whether that's UEC, whether that's UR, they all run hub and spoke models where you have a central processing plant in the middle and multiple projects that will then feed into that central processing plant. So our strategy is to build out our own portfolio to gain the scale and size, getting to that 20 to 25 million pounds to say we're ready to go to a production decision. And then that's where we have more optionality, because you have a production decision of a central processing plant or somebody in the state. And again, there's already 6 licensed and operated in the state that say, hey, we've got a central processing plant. Let's add your projects so that we have more spokes that will feed into it in the years ahead if they want to, increase their license capacity or just fill the central processing plant as it is. So that's going to be, again, our continued strategy. That's what we're pushing towards. We've got some near-term catalysts. And again, always doing a lot of work to try and grow. And again, it's been my stated goal that I want to get to that 20 million compliant pound number in the ground as quickly as we can. And again, I think the efficiency and the effectiveness that we've been able to move these two projects along show how serious we are and how much urgency we think is needed here. Again, this is, a U.S. market that consumes 51 million pounds a year right now before any of the new demand starts to come online, and is, hardly producing 1 million pounds a year. So if that's going to happen, a lot of that pound production is going to have to come out of Wyoming. And that's why we are focused there. We think there's a lot of opportunity. And again, that's why we're working as quickly as we are there.
Is there anything that we haven't yet covered, or anything you think it's important to emphasize on Noble Plains Uranium that potential shareholders of the company should be thinking about?
Yeah, I think, again, touching on our catalysts, and I think, the ongoing catalyst is the sector that we're in. I mean, it's always important when you're investing in commodities to be in the right sector at the right time. And I think the way that the uranium market is setting up, the dynamics that we're seeing are just showing that, it's going to continue to strengthen in the years ahead. So every catalyst we have, I think, will just be, multiplied by the fact that we're in a good sector that's continuing to strengthen. And the one thing that we haven't touched on that, since the last time I was on the show was adding good people to our team as well. So a very key addition was Chris Healy. He's a director of the company, very engaged. And he spent 20 years with Cameco and actually was a senior geologist designing the well fields at Cameco Smith Highland Ranch, which is, again, adjacent to our project. So again, somebody who's been on that project for years and years, understands what the mineralization looks like, is a key technical aspect and a great addition to our team. And then we also brought on Luke Norman as a strategic advisor. He's a large shareholder of Noble. Not only has he been in the capital markets for decades and raised several $100 million dollars for junior companies, but as the founder and chairman of US Gold Corp, he advanced their CK Gold project, which is just west of Cheyenne in southern Wyoming, all the way through the permitting process to be a fully permitted project ready to move forward. So again, in a state where we're working to develop projects and bring them into production, somebody who's done exactly that with a lot of experience. really just adds to the depth of our team. And again, it's good projects in the right location with the right people moving them forward. And we think Noble's, really checking all the boxes, and we're excited about the uranium market, where it's going. And we think we're giving ourselves a lot of leverage to that market. And again, as we firm out that baseline value with compliant pounds in the ground, plus, what we're doing on Shirley Central, plus what we're doing with the expansion of Duck Creek, plus the other projects that we're continuing to look at, we think the multiplier effect of what we're doing is only growing, and incredibly excited about what we've got coming in the future.
Excellent. Well, I'm going to put links in the description below to the Noble Plains Uranium website, as well as social media, if people want to follow along with the company. Drew, once again, it's been a blast. Thank you so much for coming on.
Always great to be on with you, Jesse, and thanks for having me, and look forward to being back.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.